Hello, and welcome to this episode of Blockchain Bylines. My name is Nic Cary, co-founder and vice chairman of Blockchain.com. Today, I'm joined by Ian de Bode, chief strategy officer at Ondo Finance. In this episode, we're going to explore what tokenized equities mean for the next wave of crypto adoption, Ondo's integration with Blockchain.com, and the broader implications of tokenization. Ian, welcome to the show. Tell us a little bit about Ondo Finance for our audience that may not be familiar with Ondo.
Yeah, the best way to think about Ondo is we're a company that puts traditional financial assets, so think of your treasuries and ETFs and stocks and the like. You put those on crypto rails and make them available to a global audience. We also develop these services and infrastructure to make that process more seamless and to give real utility to these assets that we have tokenized. So you can almost think of us as, sometimes we call it a circle for stocks in treasuries, right? What Circle and other stable coins did for the US dollar, we're doing for treasuries, ETFs, stocks, and the like.
Very cool. Well, I think we're going to need to learn a little bit more about how that happens and what you mean by tokenization itself. So let's get into this. When people say the word tokenization, and when they're talking about securities, how would you try and explain that simply to someone who's really kind of new to crypto?
Yes, I love this question because tokenization is surprisingly easy, actually. Tokenization just means that we, as the issuer, as a company, we put a token on chain as a token, like you would normally have it, right? That represents something that exists in traditional finance. That could be a dollar, that could be a treasury bond, that could be a stock, that could be an ETF. For every token that we issue on the blockchain, we need to make sure that we back it at least one for one with that actual asset in a traditional finance account. Just like with a stable coin, exists on chain, you want to make sure that there's at least $1 equivalent sitting in a bank account or a custodian. Same thing we do for treasuries, stocks, and ETFs. We can issue, let's say, a tokenized Tesla stock. When we do that, we want to make sure that there is at least one, ideally slightly more, Tesla stock sitting at a custodian that can back that token that we have issued. That essentially is tokenization, right? You take a traditional asset, you put it in a custody account, you make sure that it can't move and that it's there. Whenever you want to redeem it into cash, you then issue a token on a blockchain. And the beauty of doing that in the first place is that this token can now move around 24/7. It can engage in smart contracts. You can use it in DeFi as long as it's properly designed. Whereas this traditional asset that you put into a bank account, a custody account, doesn't matter, couldn't do that, right? It typically could only move sometimes 9 to 5, at best 24/5, but definitely not 24/7. And it can definitely not engage in smart contracts. DeFi, it is really limited to that environment that you're holding it in, typically within a specific bank. With tokenization, you break essentially that mold and you enable these assets to float around freely, to be globally distributed, and to become smart and really useful by being able to use it into DeFi and have it be programmable.
Cool. So assets with wings. If you had to quickly just sort of summarize it in one sentence, like why is tokenization such an important development for the future of finance? I mean, the stock itself was like a breakthrough in finance, as that was first developed. And I remember when I was a kid, like I was given a piece of paper, a stock representing a share in Disney. And that was like, I remember treasuring that and, holding it in my personal possession. We've obviously come a long way since issuing paper shares. But what's the big breakthrough here that might help people understand the magnitude of this innovation?
Yeah, I love that paper example, actually, because I think you would appreciate, people used to have the paper certificate, and that just meant ownership of the stock or the bond or whatever, right? And you could even transfer that piece of paper around, and that meant that you just held the stock or bond. That model, when everything was digitized, was replaced, right? You would then have a brokerage account or a bank account or whatever, and all your assets would essentially sit within that account. You could not move it, and you're completely locked in because that provider that holds your assets in digital form had to fully KYC you, and as a result, you had platform lock-in, right? That now with tokenization, that mold gets broken a little bit because for the first time, you can have the equivalent of a bearer instrument, like those paper certificates that you used to have, but in digital form, freely transferable 24/7 globally to anyone you want, right? So you get the benefit of actually owning the asset yourself, but on top of it, you get the benefits of these things being digital. So now you can send them globally to anyone with an internet connection, which previously was not possible. So tokenization is pretty disruptive and important, I would add, because it really breaks the mold that we have right now in finance, where your assets are being held in a specific account. You have full platform lock-in. You cannot move these assets. If you do not have access to a particular asset you want within this brokerage environment, you just cannot have it. You would have to open up a new account. If you want to take out a margin loan against your assets, get some margin on it. If you don't like the margin rate, tough luck. You can't really move your assets and shop your rate around. So the evolution that we've seen from analog paper form into digital form has been very helpful in some parts, but what it did create is complete platform lock-in in all of our financial services. It's kind of the same thing that we saw with cash, right? Physical cash, you could just freely send it around to people. It has some downsides because you have to hold it on yourself, and it's not always the safest thing, but at least you could freely transfer it around, and it was always yours. We then went to a digital bank account where your cash really sits at the bank. If the bank doesn't like you anymore, they shut down your account. And, moving it around within the bank typically is possible, but whenever you want to send it to someone else, it takes a couple of days to arrive, right?
And it costs money.
And it costs money because they charge you all the time on whatever you want to do. That mold is being broken by tokenization. We've already seen it with stable coins, where that was essentially the tokenization of cash. What we're now doing is the tokenization of all the other assets that people typically hold, including stocks, ETFs, and treasuries, and really enable these assets to be transferred globally. That also means that for some of the people listening that, are in markets that historically have not had access to all of these financial instruments, all of a sudden it is possible for you to get access to these things because exactly of what we described. These assets can move 24/7, can be distributed globally 24/7. So the Web3 wallet that you have, the blockchain.com wallet that you have, you can now actually acquire these assets whenever you want and freely send them around to people whenever you want.
It's so exciting. And we've talked a little bit about, tokenized cash now, tokenized securities, and a new emergent theme, a vocabulary word that people are going to need to get used to is hearing about RWAs,
Right.
which is other kinds of real world assets. And I want to spend more time talking about what the exciting democratization of finance that you started to scratch at there first. But let's get into RWAs first, because every cycle in crypto seems to introduce a few new, terms, and this is probably one of the ones that may be unfamiliar to people. So what's so monumental about these RWAs?
Yeah, I mean, RWA just stands for a real world asset, right? And for the first time, these real world assets, meaning that we've known them from the traditional world, are now making their way onto these blockchain rails. Historically, the blockchain rails that we all like using were used to have digital native assets like Bitcoin, like Ethereum, like, name your major L1 coin or altcoin that you like. And that was phenomenal because we were able to test out all of these primitives in DeFi. But ultimately, if you want to take blockchain technology and these platforms mainstream, you have to find a way to take the world that we all know that has cash, treasury, stocks. Some people are tokenizing real estate, right? PE funds, all sorts of real world assets, and move them into the blockchain environment. And that is really what you're starting to see now is people figuring out ways to do that, get access to these assets. It all started with the stable coin, which is also a real world asset, right? Because it represents a dollar. But now for the first time, you're really starting to see other asset classes move on chain at scale. When I joined Ondo about 18 months ago, I remember the tokenized treasury category as a whole was $1 billion. Now, 18 months later, I think we're coming up on almost 10, right? So you're starting to see real acceleration and adoption of those real world assets. In fact, when you look at the graph in aggregate, so the total number of RWAs on crypto rails and how it's growing and evolving, it truly is a hockey stick curve. So for the first time, these assets are making their way onto blockchain rails, and that is monumental because now we can really start doing financial services like we know it on-chain 24/7 globally at scale.
Very cool. Let's talk a little bit about Ondo tokens themselves. Can you describe what those are? And then I think we need to get a little bit deeper into the transparency aspect of it. So how can consumers have confidence that those things that they're purchasing, like a Tesla stock or a money market fund, are in fact, backed by something? Like, how do you give people confidence at that bridge?
Totally. Yeah, it's a very, very important question because I'd say even the number one thing that you want to make sure when you buy a token on chain is that it is actually backed one for one by the underlying so that you're not buying synthetic exposure, right? We've seen, people historically, unfortunately, have been a little bit burned by tokenized stocks in the crypto environment. There was the, mirror stocks in the Terra ecosystem and other implementations of it. They were all, unfortunately, synthetic exposure. That meant that when you buy Tesla on chain, there's no real Tesla stock backing it. So the value of this thing can be very volatile, and a lot of people got burned. We issue our tokens always fully collateralized, fully backed with the collateral buffer on top in a fully bankruptcy remote design. What that means is that if you hold one of our tokens, Ondo GM Tesla, right, you can always rest assured that this token is backed in a clearing broker account with a Tesla stock one for one. There's also an additional collateral buffer on top so that we can make sure that whatever you're holding, this value is always backed by sufficient underlying and then some, right? We also issue these tokens as notes. They're actually debt instruments against the issuer. That's very important because what you're holding will make you is actually a senior secured claim on the underlying. So if anything ever happens to us as the issuer, God forbid, right? Let's say our collateral buffer falls below a certain level, or we fail to meet a redemption in a timely manner, we have an agreement with a third party called a collateral agent that has access to our clearing broker account. They can always see how much we're holding. If anything ever happens to us, they are actually legally obligated to seize the underlying and sell it for cash, stable coins, and repay our debt holders, the debt holders being the token holders of the issuing company. So as a result, when you hold the Tesla token on chain, you will always be first in line to get your money back, no bankruptcy court required. So it's a fully bankruptcy remote design. You have a security interest in the collateral, and all of our assets are always one for one backed, plus a collateral buffer on top. These are like by far the best investor protections you can find on chain. Quite frankly, they are better than the investor protections you have when you hold a stable coin. So we truly feel like this is about as good as it gets from an investor protection standpoint.
Amazing. Well, I'm glad to hear about that. I think it can give customers some confidence if they're buying these tokens now that, they're really getting what's on the other side of it. So we're very proud to, at blockchain.com, have a partnership with Ondo and Ondo Finance. And one of the things that we want to do is proliferate access to all of these emergent and also historically difficult to access asset classes. In a lot of cases, you needed to be either a high net worth individual or an American, or maybe have a private banker to do some of these things. And now we're broadly democratizing this for billions of people around the world. So I want to hear, from your point of view, why are you guys excited about the partnership with blockchain.com and what makes, sort of this type of partnership interesting to you?
Oh yeah. I think it's incredible, right? People really haven't fully appreciated the fact that if you have a blockchain.com wallet, you can just buy any stock and ETF that is tokenized and hold it in your wallet, self-custodial. Like if you would have told me that even a year ago, I would have said you're dreaming. Like that whole concept of essentially now everyone with a crypto wallet, including a blockchain.com wallet, can have access to US stocks and ETFs just as if you had a Robinhood account, right? And doing that 24/5. I think that is a very meaningful innovation because all you need is that crypto wallet and the stable coins to actually acquire these things and hold them self-custodially in your wallet. The amount of access that opens up, I'd say, is quite profound. The US capital markets have been a global engine for wealth, really, as long as you had access to it. the returns that we've seen from things like the S&P 500 and the NASDAQ over the past decades, even the past 50 years, has been absolutely astounding. And so the main difficulty, though, historically was you needed to have access to it. You needed to find a way to actually acquire these assets, but then you can compound your returns. And that, for the first time, is now enabled on a global scale. I think a lot of people don't know about it yet, but the fundamental innovation, the fundamental rails are there thanks to the partnership that we just announced. So I'm truly very, very excited for what that could mean for a global investor base that really wants to compound their returns and build their wealth.
Yeah. So for people that don't know, there are nearly 100 million blockchain.com wallets around the world, basically in every non-sanctioned jurisdictions. The DeFi wallet is available to everybody. All you have to do is sign up and download the app right from the App Store. And now you can have access to tokenized US stocks via the partnership with Ondo. It's pretty exciting. So I don't let's contextualize this a little bit for people. What are some of the most popular tokenized assets people will recognize that they'll be able to look at, buy, and purchase?
Yeah, it's interesting. I wouldn't necessarily have expected it, but Tesla is by far the most popular. Some people love Tesla and buying Tesla stock.
Surprising.
Yeah, it's surprising. Nvidia is very popular. Some of the other major tech stocks, Apple, Meta, Google, even Robinhood, quite frankly, is pretty popular. You had some crypto stocks like Circle and Coinbase that are pretty popular. And then obviously, the big elephant in the room are these, index, the S&P 500 ETF, the QQQ ETF, which gives you exposure to essentially the tech sector in the US. Those are by far the two most popular ETFs. And then some people are buying gold and silver ETFs these days, actually, which is quite interesting. I wouldn't have expected people to go buy gold and silver on chain, but here we are. I guess it makes sense with gold rising in particular. A lot of people who own Bitcoin maybe feel a little bit of FOMO and want to own some gold, and our platform is one of the easiest ways to do it. One other thing worth highlighting, by the way, on why our platform is kind of meaningful in the first place is that when you look at other tokenized stocks, what you want to make sure when you buy something is that it's always at the right price with the right liquidity, right? You want to make sure that you can't just buy $100 worth of it. You can buy, even if you want $1 million worth of it, and it's not going to move the price. If you then sell $1 million worth of it, again, it shouldn't move the price, right? That deep liquidity at the right price is very important. The other aspect that people look at and that is important is my asset permissionless, yes or no? Can I move it around? Can I use it in DeFi? And our platform is the first time that both of those conditions are met. Typically, people either had a permissionless token but couldn't guarantee the price and liquidity, or people could guarantee the price and liquidity, but it wouldn't be permissionless. For the first time, our platform enables both, which is why you're starting to see people really move in size into these assets, particularly the S&P 500, QQQ, gold, Tesla stocks, and the like.
This seems like such an amazing gateway into DeFi to liberate, all these trapped asset classes and provide people with novel ways of not only having exposure to these emergent asset classes and traditional asset classes, but actually be able to do even more with them. So talk to us a little bit about maybe an example of how someone would use some of these assets in DeFi just to get some ideas out there.
Oh, for sure. I think right now you can take one of your, tokenized stocks and ETFs and pledge them as collateral at a major DeFi protocol like the Morpho and essentially take out a loan against it. And I think
this is what wealthy people have been doing, by the way, forever.
Yeah.
And they do this because they don't have to pay taxes on their income on this way. So it's basically they use their wealth that's in assets, they pledge it, and they borrow money against those things. And this is like a secret thing that, only the richest people in the world have sort of been aware of. But can you explain that mechanism just a little bit? Because I think it's so groundbreaking and so important for the democratization of financial services. It's important for audience to understand it.
For sure. So if you hold something like the S&P 500 ETF, it goes up on average 10% every single year. Right. You compound that over multiple years. I think about every 8 years or so, your asset, your value doubles. Right? If you then ever want to get liquidity against it, let's say you need some cash, you could sell some of it. But to your point, in most jurisdictions, at that point, you're going to be paying taxes on it. Right. If you don't want to pay taxes on it, what historically a lot of wealthy people have done is said, I'm still going to keep this asset, but I'm going to pledge it as collateral, take out a loan against it. I still retain my exposure to the underlying. So this thing continues to grow 10% year over year. But at the same time, I now have some cash, or stable coins, that I can use for my daily needs. To be clear, you're still going to have to pay a loan back, but it provides you with a little bit more flexibility whenever you need liquidity without necessarily incurring taxes. I would argue one of the reasons why DeFi became popular is because it's the same dynamic. A lot of people were sitting on a lot of Ethereum or Solana or Bitcoin and didn't necessarily want to sell it, but wanted to get some liquidity on it. Same thing, if you pledge it as collateral in one of these DeFi platforms, you can take out a loan against it and, be more tax efficient that way. But now we're enabling that for these ETFs and stocks, which to your point is pretty meaningful because it's what a lot of people, particularly in the US and Europe, have figured out a long time ago.
Let's look into the future a little bit. Not all of the assets are available yet. So how do you think tokenization will evolve over the next few years? Give us a little bit of maybe like a strategic forecast on that.
Yeah, we're really only just getting started, right? We launched with 100 or so stocks and ETFs. Whereas if you look at the total universe of assets that trade 24/5, you're looking at 1,000 plus. So there's a lot more assets that we can put on chain that I think over time people will really want to have exposure to. And when you want to run an actual robo-advisor, right? This is a concept where you pledge your assets to a company or an algorithm or an individual and say, invest it for me. I just want to get, nice returns. You need that broader universe of assets that exists on chain. So we're working to enable that. Once these assets live on chain though, right, you're going to be able to do a lot more with them. People are going to be running AI bots that invest on these things. It's a full democratization, I think, of a hedge fund and what it is and how many people can actually contribute capital to it, how passive investing occurs, not just 24/5, but 24/7. I think all of that's going to change. And DeFi itself is going to have to change a little bit because once we were talking about 1,000 stocks and ETFs on chain, getting margin on a portfolio that size with that many assets, right now DeFi can't really support that. So I think we'll see more and more assets. We'll see more and more utility and investment strategies on these assets, and then DeFi evolving in order to support that scale of assets and the capital at large.
It's an extremely exciting time, and I think Ondo's leadership in this space is so impressive. So I guess one last question here, and then we'll do a lightning round. If you had to summarize what excites you the most about the Blockchain.com partnership with Ondo Finance and the broader RWA and tokenization, what is it?
This is going to sound pretty basic, but it is so fundamental. And it is that global access to US capital markets and using it as an engine for wealth. I think it was Warren Buffett who said it, right? The miracle of nature is compounding returns or something like that.
Yeah. And Albert Einstein said the most misunderstood concept on the planet is also compounding.
Exactly. So just this whole concept of anyone globally now can buy the S&P 500 and get 10% return on their assets and essentially double their wealth every 8 years. That's astounding, right? And it's going to take some time for people to figure this out. And I'm fully aware that, the investment size of a lot of people globally is not going to be that much. But compared to the current state where they're often locked in with a currency that inflates a lot, with a capital market system that does not go up, quite frankly, goes down. The return on most capital markets outside the US or Europe a little bit has been very disappointing, right? So a lot of people are earning quite a lot of capital, but they just can't invest it and they can't compound it. In order to compound it, you really need access to US capital markets in particular. Europe is nice. US, quite frankly, historical returns perspective is better. And making that engine of wealth creation available globally is a fundamental game changer.
Yeah, looking at some economic data over the former decade and the rate at which the American economy outpaced and grew, the European economy was very, very impressive. And so getting exposure to that for people around the world is key. Speaking of which, which jurisdictions will this be available in? How do we need to think about that?
So in the primary market, if you mint and burn it with us, it is not available in the US and a couple of other restrictions, particularly sanctions countries. These assets are permissionless in the secondary market, though, and they can freely move around. So the full answer to that question is a little bit more complex. There are certain jurisdictions that are absolutely blocked from access, but by and large, it is a pretty global footprint.
Great. Cool. Okay. Well, I think we'll leave it at there, but I wanted to finish off. Thank you so much, Ian, for coming on and sharing more about this extremely important work in partnership with blockchain.com. So for all our listeners, please remember to subscribe to our channel and leave a review if you enjoyed today's episode. And until next time, I'm Nic Cary, and on behalf of the entire blockchain.com team, thank you for tuning in.